Good morning, everyone. Welcome to the Wednesday webinar. I'm Todd Gordon of tradinganalysis.com. It's August 21st, 8:47. Only 2 minutes late. Better, Joe. Your last day here at Trading Analysis. We're only 2 minutes late. That's good. Welcome. Hey, guys, you can see this fine gentleman right here. Wave, Joe. They can see you. We're going to bring him in at the end of the webinar. And we're going to talk about everything you've learned and everything you've done here at Trading Analysis. So it's his last day. I'm sad to see him go. He's a great guy. I tried to convince him to not return to college, stay here. I think he's still thinking about it. I mean, that's easily like a $100,000 swing, right? Right? Rather than pay 50, who knows what we pay at Trading Analysis? Could be 150, could be 200. Maybe you break even. Maybe, I don't know. I wouldn't let him do that. I'm just kidding. So, guys, good morning. Let's have some fun here. We got a special guest, Amelia Bourdeau, who's a good friend and institutional FX trader. She runs her own business now. We'll bring her in at the top of the hour. Futures are up fairly well here this morning. We've got some fiscal stimulus happening. So let's kind of make sure I'm not screwing anything up here. Be on the watch page here. Let's bring this in. Okay, good morning. How's it looking, guys? Hey, Oleg, what's up? Good to see you. Kevin T, good morning, good morning. Good friend and client there. Next Generation, Javier. Michael, good attendance. All right, good morning, guys. All right, so let's go. Let's see, coffee out of here. So, guys, it's a thin market right now. Let's kind of look at the Elliott Wave position of the market, kind of jump in here. And I want to engage here a little bit, guys. It's a market that is typical for summer. We have a week and a half left to go. We have, oh, what's going on here? That's awesome. Oh, Terry, don't you love it? All right. So no Elliott Wave labels for now. Guys, it's quiet. We have a market that is somewhat range bound right now between 29.50, 28.25. What exactly is happening? I wanted to kind of start from a blank chart and kind of show you what is kind of how to break this down. If you're just kind of new to Elliott, coming from the lows in 2018, what's happened? This rally here is kind of, it's hard to really pull this apart, and there's several ways to look at it. There's two ways to approach. Either it's an A, it's a B, and it's a C, right? And that means we're going to decline. So as we get off this daily and down to the 195 minute, let's kind of show you what the count may be. If there's in fact a new downtrend, you have to count a 5-wave move from the highs. And that's going to indicate that the trend, at least in the near term, has temporarily changed. All right, so let me just go over here, audio. Okay. So if we're in fact in a new downtrend, guys, you have to be able to count 5 waves. And actually, let me mute these guys. There we go. So is this a 5-wave move? The way you would look at this is if you want to count a 5, it's going to be down in 1, up in 2, 3, 4, and then wave 5 did not make a new low. That'd be a truncated situation. So, all right, fine. So that's potentially a 5-wave move. Now, what is this correction? Obviously, it's August. It's quiet. There's a lot in the news cycle right now. We've had monetary policy stimulus. We're getting some fiscal stimulus. Markets don't know what to do with it. We have rates dropping, bonds going, gold going. I just secured my 30-year refi. I got a 3.375, which is unbelievable. I moved here a year ago in Saratoga. I was at a 4.6. So the markets don't know what to do, with this plunge in yields, and I can't wait to talk to Amelia about that. So if we look at this through the filter of Elliott, we have 5 down potentially, and then it could be we have a 3-wave situation right there. Now, the rule with Elliott, there's only three corrections, okay? There's a zigzag, which goes like this, and I'm going to try to draw them all here. Decompose one. Actually, let me pop that up one. Control plus. All right. So this is the first kind of Elliott wave. What the hell is going on with this today? Anyways, so the first one is going to be down, B wave counter-trend rally, and then making a new low in C, right? So that's the first one, which is called a zigzag. The next one is going to be what they call a flat. Down, up, down. It's going to look like this. B goes up and retests the high, and then C makes a new low. Show lines. From what you know in Elliott, what could this potentially be right here? Right? This could be either a zigzag where B makes a retracement of A, or B makes a full retracement, or beyond, beyond the retracement of A. We just did a double bottom here, so it's more than likely so far a flat. Okay, so in the Elliott wave theory, we need to be able to see 3 waves in A. This is a little suspect down here, 3 waves down in B, and then a 5-wave move in C. The rally today, I'm a little afraid that it might fulfill the requirement for a 5-wave move in C. We're going to get a gap today, a gap higher. That would fulfill the corrective flat. And I'm a little afraid that if that is in fact the way and we start to fail, then we're going to get a pretty significant decline on the way down. Okay, so that's going to be an issue. The rut, as you guys know, has been a massive underperformer for a long period of time here. We've got sideways consolidation, just absolutely doing nothing. Massive underperformer. And then the NASDAQ. The NASDAQ is actually showing signs of hope, because I would propose to you guys that we don't have a 5-wave move, a complete 5-wave move here. You could say that for you Elliott Wave hardcore Elliott Wave guys, that this is 1, 2, 3, 4, 5, and here's your ABC flat. The problem is there's 2 parts. There's 2 problems with this count. One, you can't count wave 1 as a 5-wave move. And number 2, your third wave is clearly a 3-wave move. The NASDAQ's actually showing better relative strength and starting to indicate that maybe this is just corrective. Maybe it's just sort of an ABCX, ABC down. So the NASDAQ's actually showing some signs of hope here. Bonds, gold, they're obviously showing some pretty significant risk-off situations here. It doesn't seem like my charts want to behave here today at all. We did actually add some gold to the portfolio. We're seeing a major move up in bonds and gold as U.S. catches down to the rest of the world in rates. I still think there's more room to go in gold. We put some more into the portfolio right up here, looking for 5 of 3 up in gold. Bonds, as I mentioned, completely rallying. Getting a little bit of a pullback here. In bonds, I'm concerned that we may have a 4 or 5 to go. A little bit more upside before we settle into a pretty serious consolidation. Okay, so this is actually why I locked in my rate yesterday, is based on this count here. If this is accurate in bonds, we have a completed 3rd wave move up with the requirement 5 waves in between. We should get a pull back in bonds, up in yield. So I locked in yesterday on my 30-year a 3.375. It's ridiculously low. Didn't want to pay off the loan. Obviously, I think you can make more money in the stock market, up or down. So I'm like, forget it. I'll take that cheap money. So we'll see. We'll see on that. If the bonds sell off, is that a good thing for stocks or is that a bad thing for stocks? I don't know. And they say technicals and specifically Elliott Wave is subjective. I don't know. Higher yields, good or bad? Well, let's ask Amelia. So that's kind of the look. We're light on positions, really. It is a summer market. I've been through only 20, I would say 19 trading summers. Some are busy, some are slow. I can remember 2002 which was a crazy summer. That was WorldCom and Enron, my biggest trading year, as I was only 22 years old, 3 years old at that point. This is a quiet summer. Okay, everything that's going on in the news cycle, this is quiet. So just keep that in mind. Don't get too crazy with markets, positions. I don't think this is a time to take aggressive risk unless we start to move in on the short side. Okay, unless we start to really determine that the flat sequence is complete and we're about to drop away. If that's the case, a retest of the B wave lows at 2,700 is easily attainable. Okay, we are tracking a bullish count, and as you guys can tell, my motive wave for some reason is not set up correctly. Something's happening. I'm just trying to get it done, pretend like nothing's happening, whatever. So let's pull in the team and let's see what these guys are up to. Alex and Terry, you know them well. Good morning, team. How are you guys doing?
Good morning, Todd.
Good morning.
Hi, Terry. What's going on with my motive wave? Why isn't it showing our wave counts? Did you like how I kind of pulled that off and pretend like nothing happened?
I think you forgot to upgrade this one to 3B, beta 3B.
Oh, that would make sense. Okay.
Because everything's working on mine. It's only your TDA indexes.
No. Okay, that's interesting. That's a good.
Which is the ones you want to talk from. So you need to do the beta 3B upgrade. So guys, we're working through version 6 beta testing in motive wave, and we've made the migration with our own clients here. We have the service where we call the repository, where Todd can share his charts with our members and subscribers. Making the transition, we're cleaning up some directory formats and things like that were causing us some lost count issues. So
you're right.
One more computer. Todd's got too many computers. That's what it is that he works on. So
yeah, I'm still on version 6.0 beta 3A. Okay.
Yeah, that's your problem.
I was more concerned about my guests and you guys looking good. It wasn't about my own content. I want to make sure you guys, your audio's checked in. Joe, you know what? You're just not hacking it. You're done. Don't come back after today. I'm sad to leave. I hate that Joe's leaving.
Joe's been a big help to you.
He's been huge.
Really has. Yeah.
Everybody should have an intern. He's great. We're going to talk to him in a little bit. So listen, Alex, Terry's your title changes what's your title this week?
Oh no, I'm research director now. So
QA, research director, director of operations.
No, director of operations. That's Andy.
Okay, right. Okay. All right.
Yeah, Andy. That's Andy's job.
Alex, what's your title?
My title.
Good. Way to think on your feet, buddy. All right, let's talk about Bitcoin.
Yeah, I'm kind of a modest analyst.
You're so full of shit.
No. He's the senior crypto Forex analyst.
He's busting my chops. He's giving me lip all off camera, and then as soon as we get on, Alex. All right. Alex just put on a new Bitcoin position, so let's show that right now. Nobody was looking for this move except my friend Alex. Alex, give me 1 second. Multi-view. Let's put Alex in. And you are live, sir. Take it away. Show us what you're doing in Bitcoin.
Yeah, I'm going off on the daily. I'm still looking this nice move down in a Bitcoin. We are looking for this green wave 2, and I'm looking here for a complex corrective pullback. I'm counting this as an ABC for A, B, and C for flat for W, ABC up for X, and then I'm working down in another ABC. So we put some shorts yesterday on a Bitcoin. I will show you a smaller time frame. So we entered here on the highs a little bit below at 10,746. As soon as we saw this third wave down developing, we moved our stop loss at 1060, and I'm working now in the finalizing stage of the orange wave 3.
It's to the point where I might just stop trading stock, literally quit, and just follow Alex's analysis on crypto. Like, you just made 10% in what, 18 hours?
Yeah, it's a bit less. We put that trade, I think, last night around 7, 8, right, Terry? My time.
Oh,
I don't.
Terry's not in the screen.
Ah, sorry.
I can put him in here. Hold on. Go ahead, though. Go ahead.
Yeah, so basically just doing this wave count here for a finishing stage of the wave 4 down in 5, and then we're going to close it, waiting for pullback. And we are tracking these cryptos in this consolidation, and I think in a 15 days or even a month, we will planning to put a small portfolio of the long on the cryptos, because we think that
Dude,
if we get this correction,
I'm sorry, but I hate how modest you are, Alex. It drives me insane. Like, I'm trying to get him to raise his profile. I mean, he's calling markets like nobody else is. Like, everyone, as soon as like the Bitcoin bull is back, Alex is like sold, short. And then he's short, and then everyone's like, oh, it's going to zero. And Alex just said, we're looking to get long. Like, dude, you're so ahead of it, and you're so modest. Like, I'm trying to get you, like get more full of yourself. Like, you got to, like, impress people. You can't just trade well and call good analysis. Like, you got to get a bigger head. Sorry, please continue.
Yeah, I mean, we have, I stop being modest. We have an excellent result in trading Bitcoin from its lows.
From the lows, from 3,000 lows.
Yeah. Yeah. So I mean,
in fairness, Terry is right there with Alex, but I'm trying to shift Terry off of crypto and get him more focused on Bitcoin, on the motive wave, because this is another huge tier of our business. So, anyways, sorry to interrupt.
Yeah, I mean, I like cryptos because they display such a well Elliott Wave patterns, which I'm kind of in sync with. Yep. And it's not the case with the Forex, where the things are very skewed with the central banks and all of the stuff. Dude, I think Amelia...
The dollar index is the ugliest chart I've seen in years. Like, it's not...
Yeah, euro dollar as well. So
I mean, it's a tale of yen buying and commodity currency selling. Like, it's all in the crosses right now, right? And we'll talk to Amelia here in a second. But sure. Right, the overall dollar index doesn't know what to do.
Yeah, I think I will probably engage a little bit with Amelia, but I think it's now the ball is back in the Fed courtyard. And Aussies and New Zealanders are already put the rates down, so I think that everybody will wait for a Fed, as always.
That is a perfect segue into my good friend, former FX institutional trader. Didn't you work at the Fed, Amelia? Didn't you work?
I did work at the Federal Reserve Board. No, I worked at the board in Washington, D.C.
In D.C.? Oh, excuse me.
Yeah, in Washington, D.C.
Yes. Okay. Amelia, you guys know Amelia Bourdeau. She's amazing. She's awesome. We first met on the Money in Motion show, which was an FX show on CNBC. Amelia, what year is it? 19. So that had to have been 8 or 9 years ago.
Yeah, I think like 2009, maybe.
Holy.
I know, time flies.
Yeah, right.
When markets are busy.
Yeah. So she left institutional life. She went finally, after I harassed her for years, to the retail market analyst, content, education side. Her website is marketcompassllc.com. She's awesome. If you want quality, macro, fundamental. You're splicing a few technicals in there right now, sort of an all-purpose player here in the FX markets, right? Tell me about your business.
There are big levels. So Market Compass focuses, as you said, on macro markets. We specialize, I specialize in foreign exchange. I spent my career on Wall Street, both at hedge funds and some of the world's largest foreign exchange trading banks. So I was in Deutsche Bank when they were the largest trader in the world of foreign exchange, and also on FX so Swiss Bank when they were the world's largest FX trader. So have a lot of experience with event risk and volatility because my career spanned the recession and the global financial crisis and banking crisis and the Greek crisis. So I came up in the and these are pretty exciting. And you're right, in terms of, in macro, we're the doomsday preppers of the trading world. We like to look
What does that mean? What does that mean?
We like to look for big things that can go wrong and prepare to trade it. So we have those now. And so we do look at the larger levels that could break, because in macro, we look for big directional trades. Now, in my strategy recommendations, I talk about those things to clients because they're happening right now or could possibly happen right now. But of course, we also take a shorter term look for the individual investor or retail trader as well.
And so
I have the yield curve here for you. Just because
okay.
You mentioned it.
So I just made you presenter. So you should.
Okay. Oh, do I hit share?
Yeah, exactly.
Looks like I have to hit share.
So yeah, that was one of my first questions I've prepped for you here. Let's talk yield curve. What the hell does this all mean for traders? Is a inversion of the yield curve bad? Is it good? Is it bad but later on? Like, what does it all mean?
I think it's tough. I mean, right now, markets just take this as a warning sign.
Oh, wait, let me share screen. Hold on one. Sorry.
Can you see my yield curve?
Yep, no, you're fine. You're absolutely fine. Let's do, sorry, guys.
I just hit share screen.
Joe, the intern, it's a good thing this is your last day. That's all I got to say. Terry, I'm sorry, sir. I am going to, you know what?
Yeah, you can take me off.
No problem. Thank you. We're going to take... Okay.
Can you see me?
You're good. Yep, you're good.
Okay. All right, now you can see the yield curve?
Yes, yep, you're up.
Okay, this is just the U.S. Treasury yield curve. So the solid green line.
I'm just kidding, Joe. I love you. You know that, right? Sorry.
The solid green line at the bottom is today, and then the dotted yellow line here is. So you can see just a big shift down, right? That's what we're talking about. What Todd was talking about, that big shift down. And here's a 30-year like that all the way down. And you're absolutely right. It's a great time. I'm glad you did it, Todd. Maybe you got the bottom of the market in terms of refi. That's great for your mortgage. Yeah, if you have a mortgage, refinance it now. Awesome. So, and yeah, when they talk about yield curve inversion, you can see here 10s and 2s are pretty flat, almost like the same rate.
Wait. And so green line. Sorry, green line is when's
curve right
is
now.
that current? That's current green.
Yep, that's right now.
And then 1 month ago is the dotted yellow.
Yeah, that was a month ago. So you just see the shift down in the whole yield curve, right? It just shifted lower. So that means yields are lower.
Is this?
And you can see the in here, like 1 month.
Is this a healthy
5
year? So if you look at the times that we've had yield curve inversion, I mean, I was looking at 1988, 89, post-87 crash. If you look at 2000, if you look at 2008, it's the Fed manipulating the short end of the curve, pushing rates up to cool off an overheated economy. This is not happening. This is more demand at the long end of the curve, right? So
yeah, for safe haven assets, I think it has to do a lot with just a lot of things. In part, it's hard. Nobody, I think, really has for this. But what it's flashing, what it's telling us is that markets or traders are nervous. They're worried about something. They're worried about geopolitical risk. They're worried about, the possibility of a recession. Just because there hasn't been one in so long, this current expansion has been so long.
What a ridiculous thing to think. Just because we haven't had one in so long, there must be one coming. What's your
I think
takeaway?
it's by the China trade war. There's just a lot of geopolitical risk right now that we can, talk briefly about, that's making investors nervous because they don't just invest in the United States. A lot of people invest globally. But in terms of, not to be like a fear monger, although the US economy has slowed, we're in much better shape than, say, Europe and most of the rest of the world, which has some serious points of dislocation already. In Q2, the United Kingdom negative GDP growth. Certainly Argentina is completely dislocated right now if you want to look into emerging markets, and Germany is slowing. their economy is slowing pretty precipitously. So taken together, the U.S. is actually in good shape. It's just that we're not growing the blockbuster numbers that, we were a couple of years ago or even a year ago. And so people just wonder what the China trade war will slow.
Is that a
more.
result of our own domestic slowdown, or are we truly catching down to the rest of the world, which is why the Fed is dropping rates? Is it domestic or is it international?
No, I think it's a result of, I think it's mostly a result of the China trade war and the trade war with Mexico. If you see here, this really illustrative chart, this is, you can see it. The yellow and the orange line are the U.S. 10-year yields, the U.S. 10-year and 2-year yields. And the white line is a DXY dollar index. And when the white line's going up, the dollar is getting stronger.
Yeah.
And you can see here with tariff feet, if you guys remember, this was, use the tracker, it was May 31st. I remember I was down at the gym. It was like after market hours.
Which
and I got an alert on my phone.
Amelia.
I know I'm training for a marathon in California in December. But anyway, I was sitting at the gym, I was at the gym, and all of a sudden this alert like pops up on my phone. And it was like the Trump tweet that announced that tariffs are going to be put on Mexico and just increased until they like stop the border issue. And I just shorted, I went long dollar MEX like immediately. I didn't even care what the level was because I knew like it was just gonna, dollar MEX was gonna go much higher. But anyway, for our purposes, look at this. That was the day of the Mexico tariff tweet, which is after market hours. And then the dollar, and then really started the steep decline in US yields. Just markets don't like a trade war. Now, obviously that trade war with Mexico was resolved. Kind of interesting though that even though we had the second tiny, and that came with right here, you see this, that vertical line right here, that's the 31st of July. That was the Federal Reserve rate cut meeting. And then the day later, on the 1st, that's when the administration announced tariffs against China. And then Sunday night, that's when China depreciated the currency through the 7 level. And so when China took between the Fed cutting and China depreciating the currency, that's when we saw the next leg down in US yields. So it's really driven by a lot of this, I believe, is driven by the trade war. And you can see here, despite this really huge decline in yields that we've seen, Fed and the issues back and forth with China in terms of the depreciation and the threatening of tariffs, the dollar's held up. The dollar's held up pretty well. We're above this 98 level. So dollar's always safe haven. Part of the reason why the dollar is held up is because people are buying U.S. treasuries and they need U.S. dollars to buy U.S. treasuries.
This does not feel like '08, right? I mean, people are flocking to the U.S. and just all out safe haven bids for safety, even though we originated the real estate problem. This doesn't feel like this. This feels like, I think the technicals, the fact that my Motive Wave wasn't even coming up properly because I didn't install the right platform, I don't even think it's that important because I feel like this is such a Trump tweet-driven market. It's all about him positioning ahead of the 2020 campaign. He's going to resolve it. I feel like this is so transitory in nature. I'm not even that concerned. Am I oversimplifying this?
It just depends on, I told my clients, we just had a global monthly event risk webinar last month. There's so much coming up. The next one's in September. But anyway, I told them last week that, that last week we had that one day where the Dow was down over 800 points or 800 points and in that one day. And, I said to them, look, if the Dow's down another 800 points tomorrow, or
but it was up
if
400
it has
the next
multiple
day,
days of steep declines, I think he'll resolve the trade war with China. Because obviously the administration cares a lot about. I think trade war with China over if the Dow's down 800 points the second day in a row. And he did relent in the sense that he pushed that some of the, not all of them, but some of the China tariffs that are coming to the market on September 1. He pushed half of them back to December 15th. So he did relent. He did, step back and say, after that Dow was down 800 points. It could be resolved at any time.
It just seems nobody knows well timed. It's a thin time. It's middle of August. He's really putting the pressure on. I feel like this is going to come off in no time at all.
Part of this though is also.
Don't you feel bad for Jay Powell? This poor guy is. Whatever. I'm not making a comment on.
He's coming up with his. yeah, I would not want to be Jay Powell.
And then we have what,
He's
Jackson
coming up
Hole
with his
Friday.
big speech at Jackson Hole. Yeah, 10 a.m. Friday. And I was taking a poll on Twitter, like, let me know what you guys think. Is he going to use that mid-cycle adjustment language? Because the market hated when he said that. They hated it so much.
He's made some serious missteps, like this mid-cycle adjustment, and they're saying his out now, Amelia. Tell me what his out is. Is like, well, mid-cycle adjustment could be several interest rate cuts. I mean, the market is forcing him to go 50 basis point, maybe 75 basis points. So, I mean,
into a corner. He's not a good communicator.
No,
communication with the market's not his strength. So, you know, we could have a volatile day on Friday just because.
I miss Jean-Claude Trichet. That's who I miss.
I do too. I'm going to miss Mario Draghi. We should talk quickly about the ECB because that's also kind of dislocating the market as well. Draghi, this is his last policy meeting. He's my bank. So I'm sad in September, you know, he on his way out. But the market is kind of mad at the ECB. They're displeased with the ECB. They're displeased with the euro because, you know, they're behind the curve once again. The market just thinks the ECB is behind the curve once again. And so their rate meeting September 12th, they did not meet in August.
Euro chart up there while you're talking?
On vacation in like the south of France or something.
Yeah.
And
we're either in the Hamptons or the south of France. And we're working.
Yeah. We're working. You should not be missing these markets. Yeah.
I'm kind of thinking about that surfboard behind you.
I know.
You're running, you're surfing.
Everything. Today. Your chart, you were having trouble with your charts too. I don't know.
Yeah, right.
Maybe this webinar is making stuff super slow.
Yeah, you know what? It is. This program's a big bandwidth hog.
Yeah, it's taking.
That's okay.
That's China.
That's all right. Oh, okay, you got that inverted too. So dollar yuan going from 6.7 down to 7.1.
Just look it up before I can't. It's everything's super slow.
Yeah, no, this program's a big bandwidth hog. No problem. Alex,
all right,
Terry,
I just wanted to get just quickly before we talk about TV. And so that's dollar yuan coming down in the white, going lower. China's getting weaker because that is inverted, and there's one side, so they're going low, going lower. And I just wanted to make the point here that so Aussie really can't rally as weak current. It's not really possible. And so you know, I just wanted to look at that. And you're right about the crosses. You know, Aussie more on the cross, like Aussie yen. That's the high beta against safe haven, and that's probably want to play.
Aussie. Yeah, let me go back. I think Bloomberg is hammering the bandwidth here, which is fine. But
Bloomberg is a ton of bandwidth,
and this program too is also. But it's interesting. Like we're seeing, you know, there's a lot of deflationary signs out there. You're seeing Aussie break down, to your point. Dollar Norway, which the market that I've made the most money on trading in my entire life has been dollar Norway. I mean, I used to really trade.
It moves a lot. So
when it moves, it just
that's a good thing. It moves.
Dollars rallying Norway.
I call them the sneaky scan days.
Sneaky scan, there you go.
Because like no one pays attention to them, and then when they move big.
Yeah, absolutely. Dollar Norway, what a great energy proxy. I think they're like the 5th or 6th largest natural gas exporter. They're obviously huge with Brent. Aussie breaking down with the proximity to China. Emerging markets, we've been talking about. Here's
Aussie yen. So I mean, if we go super risk off, you know, what could cause super risk off? There's just some geopolitical factors out there. A week and a half ago, there were Chinese troops aligned at the Hong Kong border. Okay, and so that situation is still ongoing. I think it was Sunday in Hong Kong. They had 1.7 million people show up for a peaceful protest against, you know, the current administration. I don't know if that situation is going to get worse or not, but I do know if something really untoward happens, like China troops move into Hong Kong, that's going to be a significant risk off day in the market. It's going to be an incredibly sad day geopolitically, but it's also going to be a massive risk off day in the market. And so that's when you'd want to put on, say, and a massive risk off move, like China retaliates to the U.S. with more or something like that. Troops move into Hong Kong. Something really.
Let me just ask you. This is such a stupid question, but didn't we all see this coming? The help me with this word, democratization of Hong Kong and then eventually mainland China. Like, wasn't this inevitable?
Yeah, I mean, I remember I was just really, really new in the market back in 1998 or 1996. My first year in the 98. So in the 97 or 98, when the handover took place, the UK handed Hong Kong back to China. Yeah. I remember then a lot of people in banks leaving and going back to London. And I think just as the handoff progressed, maybe over the years, there's been more restrictions in certain freedoms there that, people aren't used to, and now tests they're not accepting of. And so I think, this has been coming to probably since the over took place. Yeah, so it's just, it's hard to watch because it's such a great city. I spent a lot of time in Hong Kong, and I know we went a lot for client meetings, and it's just such a super city and such a fun group of people. And and it's such a banking community. If you want to see a community that loves Wall Street, that loves banking, that loves trading, foreign exchange, at Hong Kong, certainly they're so fond of those markets. And so it is sad to see.
Yeah. Of course, I never went to Hong Kong, but I did when I was in the FX markets. We were in Beijing and Shanghai, and it's amazing. I remember I was speaking on their equivalent of Thanksgiving, which I think is Moon Day. And there were people. It was supposed to be like a 2-hour speech, and it wound up going 4 hours. And it was dinner time, and I'm like, guys, time to go back to your families. It's got to end. Like, go home. But they were it was amazing.
It's a party place. It's a fun city. There's a ton of expats from the UK, from Australia, New Zealand. There's a ton of Americans. It's a global city. It's super fun.
That's awesome.
But here's my point here was like, if there is an incredible risk-off day in the market, the Dow's down another 500 points, say China announces tariffs on the U.S., something bad in the news about Hong Kong, you want to short the highest beta currency, Aussie, versus a safe haven yen. And this is just fun to look at because there's a big in here on 70, and we're ways above it. Last week we got down to we got down, just above 70 last week, but the 70 spot 74.6 last week. Can you
push out?
If we break 70, that's a big deal.
Can you push out to at least 5-year or max? This Aussie yen level is huge. I think it's a 5-year shelf in Aussie yen. It's slow. I'm sorry, it's slow and everything.
This is 8. This is back to 2000. Oh no, that's 214. I'm trying to get it to 2008, but that's back to 14, and you see it still holds. And then
I think this is actually like a 10 or 15-year shelf in Aussie yen, and I've been talking to Alex about it. There it is.
Here's back to 08.
Yeah. If 70 goes in Aussie yen, I can't understate the importance of this. And I see a couple of people saying, we want to talk about the stock market.
Sorry.
I became a trader. Let me just underline this. I became a trader in 08 when I saw truly what the macro forces have impact, the way the 4 major asset classes, fixed income, commodities, currencies, and equities play together. When macro gets going, specifically interest rates and FX, and they really start sending a message, that's the dog, equities are the tail. If that chart breaks, if you get through 70 in Aussie yen, dollar Norway's going up, Aussie yen's breaking down, you will see massive volatility in the equity market and commodities. Right? I mean, this, I think, is one of the most important charts out there right now.
See, what happens is this happen when there's massive, back to equities, when there's massive dislocation in terms of maybe something geopolitical or maybe a tweet sends the market over the edge. What happens is the VIX, vol spikes. When vol, obviously, the vol spikes, safe haven comes in, equities fall. Okay, that's a bit, and that's what we keep seeing over and over again. Right now, the VIX is pretty well behaved. We think that the VIX is pretty elevated when it gets to 18 and elevated or above. 20 or above is the break in terms of what we think of as a high vol. Right now we're sitting around today. But you have to watch the VIX. 1581 today. But when spikes, it takes Bloomberg bring it on the bandwidth or something.
We're
When VIX spikes, it spikes.
yeah. Hey,
It's a
Amelia,
tough-
we're kind of wiping out here, or we're kind of losing bandwidth a little bit.
Should I say Bloomberg?
Nah, it's okay. It's okay. We're no, this is good. This is good. So listen, Amelia, here is
VIX. Just one last thing. When
Yeah.
people ask in equities, like I always see it on TV, just in general, like, should we buy the dip? Should we buy the dip? And you should only buy the dip if you're a long-term holder of equities, like 2 years to 5 years, and a longer term account, a value-based account. It's anytime you buy the dip and the VIX is still elevated, say 18 to certainly 20, there's going to be another drawdown. And so I just get this question a lot. And so that's why I bring it up here in terms of equities and timing the buying of equities. A long-term investor, sure, when the VIX is still around 17, you want to buy a dip like after, that 800-point fall last week, especially in tech, the tech stocks, try to pick some of them up. You can if you're going to hold them 2 years out. If you're not planning on holding them 2 years out, if you're only planning on holding them like 2 months or less, then no, don't buy when vol is elevated because you're subjected to another drawdown at any time, basically.
Absolutely. Sell some puts, accumulate some stock. I love it. Amelia, you're the best.
Thank you.
Obviously talk about some institutional FX experience being available at a competitive price in Market Compass LLC. That is the best place to find you. Let me see if
.com. Yeah, and I have an event risk webinar. It's monthly. The new one's coming up in September. We go through so much macro event risk right now. We're preparing, for Brexit at the end of October. The ECB head changes also at the end of October. We have a very important Federal Reserve meeting on the 18th of September, and we'll probably get more direction from Powell on Friday, which could be volatile because he's not a great communicator. And also the ECB, I just wanted to let you guys know, we're watching on Euro Yen 117.50. That's a huge level on Euro Yen as well. And ECB is expected to cut rates in September on September 12th, but the press conference could be very volatile, and that starts at 8:30 a.m. And the market can agree on whether or not the ECB is going to restart bond buying in September. So look for that to either be announced or not. And so that's why September 18th, volatile.
Are we going back to QE, the U.S.?
I'm not sure. I think if the China trade war is resolved, then no, we won't. I think if it drags on like another 2 years, then yes, we'll have. The China trade. I'm not saying that the administration isn't doing it. We have issues with China, and they do need to be resolved. It's just, it's an ongoing process. Unfortunately, that doesn't look like it's going to have a near term.
I feel like this is so. I feel like this is so politically timed. I think that one category, just absolutely no. Like this is going to be resolved shortly. We shall see. Amelia, again, she's at marketcompassllc.com. She's awesome. Go if you want some really good in-depth macro analysis. She's specializing, obviously, in FX. Go check her out. And she is the first repeat guest on our yet-to-be officially determined name show. So, thanks, Amelia.
So honored.
Amelia, one question. I'm looking to put something against Canadian dollar because I think that on macro side they're at 175, and their real yields on 10-year are around 1.2, 1.1. So they're kind of behind of a curve, and inflation is moving downwards there. So I think they're a little bit elevated with rates. The rate decision is at September 4th. So I think they're going to drop maybe even a 50 basis points. I don't know if you agree. So I'm looking to put some trades on against the CAD, especially oil is not showing much as well. So I think they're kind of a mismatch there with their policy. Do you agree? Or
I'll say this. I agree that their policy is mismatched. They are most likely, I don't want to say they're making a mistake yet, but they could be significantly behind the curve ahead. They're not expected to cut rates September 4th. I kind of think,
really?
while I agree with your overall premise, I think that CAD is rich. What I would do into September 4th, they're not expected to cut rates September 4th. If they did, that would be a big surprise to the market. It's not priced. They haven't in any other language alluded to a cut, or even they haven't even turned dovish, which is a little strange. So I agree that they could be making a policy error ahead. I think this is Canadian dollars like last stand is what I think. So what I'm doing is I'm shorting Kiwi CAD into the rate meter. So just cut basis points. Canada isn't expected to cut. As I said, if they do, and I'm wrong, CAD will certainly reverse. But I think this is like Canada's digging in. It's like their last stand before they capitulate, probably more so like in October or November on the rate side. So I'm looking for Kiwi CAD to short it. As long as it's sub spot 86 the figure, I think it could move down to like spot 84 if you want to, if everybody just wants to look at that Kiwi CAD chart. So I'm short Kiwi CAD because I don't think Bank of Canada is going to cut in September. I'm not saying that's the right thing in terms of their policy moves, but I think it's their last stand before they capitulate later this year.
Mary Jane's last dance.
I also wanted to ask you, what is about its Kiwis? Because I mean, just a few months ago, they said they're not going to cut rates for next 2 years.
Yeah.
And they cut 50 basis points all of a sudden. They drink too much milk there. I mean, it's really...
No, I mean, what people have to remember, surprise, what people have to remember about New Zealand is that we think of it as the G7 economy or G10, not G7, G10 economy, and it is, but New Zealand's only 4.5 million people. Its GDP is the same GDP as Colorado, the state of Colorado, okay? So it's much, much smaller than the US, than Canada, than even Australia. It's a much smaller economy than Australia.
The same argument was made about Greece and Portugal and all that. And if they begin to unwound, it's indicative, it's a leading indicator to what might happen to the EU. And obviously New Zealand, the same thing, proximity to Australia, which by default is proximity to China. Like, I don't know if I buy into that, or am I wrong?
What I mean is they can change because their economy is smaller, they can change policy more on a dime, and it's not as impactful to the global markets because they don't really impact the global markets. But what they did, which was interesting, was that surprise 50 basis point rate cut. They were aggressive, and I think good for them. They have a smaller economy. They know that they do. They know that they're, China is going to impact Australia, which is going to impact New Zealand in that order. Like, we're going to try to get out in front of do the point rate cut. We're going to try to protect our economy, and good for them for doing that. If that's what they think that they need to do, they were aggressive and they were in front of the curve, and they got the job done. Now Kiwi is on its back foot, but it'll recover. It's going to be on its back foot anyway because it's a high beta currency in a high vol environment, and as you guys obviously know, safe haven currencies perform well when it's high vol and high fees. So be on its back foot no matter what.
Yeah, I agree.
We got to wrap it up here. We're 5 minutes in, and
we can go on for an hour.
We got to. You know what? We should bring her on. We should do a joint FX webinar with you guys. In fact, we're going to.
That would be very.
We're going to do that.
All right, sorry, equity people, but we love you too.
But you know what though? No, not sorry. And I can't tell you how important if FX and rates really start moving. Pay attention because that's going to be the source of volatility. Sure. To your point, New Zealand is it's an agile, fast-moving boat.
It's agile.
But if FX starts moving and you start seeing yen appreciation, look out.
I'm going to short dollar yen.
Right,
sure.
And we're long yen. To your point. This can't be understated. And this equity market is way too quiet with too much macro. The other three asset classes moving. We have gold. We have commodities. We have fixed income. Equities are not really moving yet, so they're usually the last one to move. So this is why is why I wanted to have Amelia on. Guys, right here.
I just wanted to point out October 31st, Brexit deadline, and when it was the referendum in June 23rd, 2016, over global equities lost $2.1 trillion on that. So just be careful of that Brexit deadline also.
100%. I'm sick of hearing about Brexit. Hey, when's your webinar? What's the monthly call address
the new date
again?
is for 18th is the next webinar for global month, and that'll take you through Brexit. So it might be important this month, and it'll be the day of the Fed meeting, so it's a lot going on. You can go to marketcompassllc.com. In the tab webinar, you can watch a 2-minute video on what the webinar is and what we cover and why it's important, and then at the bottom you can sign up either monthly or annually, and you can reach out and ask questions.
Can you get somebody besides Brian Kelly behind? No, I love Brian Kelly.
He is. CNBC was on behind shot the video.
EK is the best. He's very good at FX as well. Anyways, guys, go check it out. Sign up for Amelia, obviously bringing institutional quality research to the retail crowd. Amelia, thanks for coming on. Really appreciate it.
Thank you for your time. It's so fun to speak with you and I appreciate it.
We'll get you, Alex. I know you have so much. We're going to get you and Amelia on an FX webinar. I promise it's going to happen.
It would be fun. All right. Thanks, everyone.
All right. See you, Amelia. Thanks again.
Take care.
Bye-bye.
Bye. Thank you.
Okay. So now let's just do a quick equity opening here. We're going to do this. We're going to take, let's do this here, production. We're doing this live. That's a Bill O'Reilly analogy. All right, guys, so let's do a quick opening here. There's for those of you following on the Elliott Wave side, let me just do a quick adjustment here. We are going to take Terry in, Amelia out, move him over. Okay, so guys, on the Elliott Wave side to open, here's the key. Okay, this is the only thing I'm focused on in the market right now. If this is in fact a flat, okay, we should hold this wave one high, which is going to be at 28.91. If you break this today, that's going to be a big problem, and we're going to make some pretty big changes to our positions. We are net short on the option side. We're long on our portfolio side. I'll show you the positions. We are still net long in the positions on our portfolio, doing quite well. We are actually outperforming the market right now. We only have 80% of our capital invested on the stock side. Let's see, 20,600 in cash, net lick of 107. So right now, I believe we are now outperforming. S&P's up 0.8. Looks like Motive Wave is off here a little bit. 29.45 is going to be current price. If we start to fail up here and start to break down through 28.94, 91 area, that's going to be completion of a flat, and we are in fact headed lower. So that's the most important part that I can see. Bonds down, crude is up. So you know what? That's the only thing I'm focusing on right now is the completion of a flat. All right, so Joe, turn your microphone on, buddy. If you guys, we're going to bring Joe, the intern, his last day. I have no idea how this is going to go. Joe and Terry yell at me. I'm going to take the headphones off. You might hear an echo. Let me just do this. Flip that this way. This is a sad day here at Trading Analysis. This is Joe, the intern's last day. And I hate to see him go. But we're just going to talk to him quickly about his experience in trading analysis. We're going to try to convince him to not go back to college. Stay with us. See if you flip it that way. Oh, perfect. Perfect. Guys, we're not talking any more market stuff. We're going to talk to Joe quickly. All right, there you go. Dude, come on over. I can't. Oh, there you go. You can see comments and questions. See, yeah. Joe the intern is right on top of it. Come on, sit down. Hey, dude, it's been a pleasure. I'm going to miss you.
It's been great.
Everyone throw a thumbs up and a like, comment. Anybody need coffee out there? It's his last day. Put your orders in now. Dude, pleasure. You're a good man. He's going to be senior at Rollins College. It's just by Orlando, right?
Winter Park, Florida.
Winter Park, Florida. How wonderful was working for us at Trading Analysis? I mean, was it just the dream intern? I mean, do you feel like you're going back woefully unequipped for your senior year in college?
I feel more equipped.
Oh, stop.
Going back.
Stop. Like, what, just good or bad? I'm not like, this isn't sugarcoat. Like, tell me, what were some takeaways, like, in the entrepreneur world, in the financial markets, like, versus what you were taught in school? Like, how does it compare? How does it contrast?
So, some things that I learned a lot.
Don't sugarcoat.
No. Some things that I learned from like an entrepreneurial standpoint.
Yeah.
These are my notes.
Oh, look at
These are my notes. I gotta
Jim,
look
how
at these.
prepared he is. He's like, guys, he's got notes here.
I gotta use.
God, such a like when you get older and you run your own business, you live just like shoot from the hip. Just let it fly.
Can't do that yet. Can't do that yet. But so first thing that I learned is a lot happens behind the scenes. Well, that's the first thing that I learned. I feel like everybody sees what happens at the surface level and thinks it's simple, but there's a lot more that happens behind the scenes.
What a great point. It's chaos behind the scenes, isn't it? Especially on these Wednesdays. Like Wednesdays, I love you guys, and put a thumbs up on the YouTube. Wednesdays suck. I'm gonna be completely honest. I love doing these. Like it's just like TV. Like I love being on TV, but everything leading up to it, the preparation behind, there's a lot to it. Anyway, sorry. I
Definitely.
Totally agree.
So that's the first thing.
Yeah.
With that being said, you got to think deeper and more thoroughly when you're doing things.
Yeah.
So just with the webinar, there's a million things to think about, and you just got to, think more thoroughly through it.
Yeah, I mean, and
can't miss things.
You can't miss things, and we're live. Like there's hundreds of people on right now, and if we miss something, the whole thing is kaput. Okay, good point. So think on your feet. A lot behind the scenes, and Joe has a big, and the way I searched or I went out and proposed for an intern was I don't want a resume, I want a video, and I want you to make a 10-minute or less video about yourself, and I don't care what it's about, just show me what you're interested in. I don't care if it's fishing, if it's baseball, if it's trading, I don't care. I just want to show your creativity, and we got about 15 or 20 videos. And Joe just absolutely crushed it. He's huge. He loves fishing.
I do love fishing.
Loves fishing. Super into sports. He made a great video, and he wanted to be an entrepreneur. So again, what would it take for me to get you to not return to college and stay? How much would it take, guys?
Probably a lot.
No. Anything else? Anything else? Like things that just takeaways working in trade analysis.
Yep.
Yeah.
Quote, Todd Gordon, good quote right here. You can't let things happen, you have to make them happen. Oh. You got to make them happen. So I think that's a big entrepreneurial philosophy there. You can't just let it happen. You got to make it happen yourself.
Well done.
So
can we talk about sewing?
So I can't sew. But
Tell them the story.
we got the job done. So we had to sew the green screen together.
There's 2 green screens up there. So go ahead.
Long green screens, and we had to sew them both together, and we got this is an example of making it happen. Went over to the hotel and got a sewing kit from the front desk and used the 3.5 threads that they gave us to sew together the green screen. But made it happen.
Made it happen. You got to be resourceful as an entrepreneur.
Yeah.
Dude, you're awesome. I hate to lose you. The Wednesday webinar has gotten better because of you. I don't know what the hell I'm going to do without you. Anyways, all right, dude. It was a pleasure. Thanks for everything.
Thank you.
You're a hell of a
Thank
guy.
you.
Guys, any future employers out there, can't wait to write a recommendation for this guy. I loved having him. I hate to lose him. Throw a thumbs up on the YouTube, whatever it's called, for Joe the intern. And guys, we're going to leave it there. Again, thanks, dude.
Thank you.
Right.
Appreciate it.
All right, we're going to turn it off, guys. Hopefully that helps, and we'll see what happens in this C-wave flat. If we start to fail, you know what's going on, and then we need to look lower. Else, we're fine. This is just a correction. See you guys. I'm going to turn it off now.